How's it going, you guys? Welcome back to Unorthodox Savings. So if you clicked on the video, you just want to learn how to trade options. I remember when I first tried to learn how to trade options, I had no idea what I was doing. I had to watch 8 to 12 videos because when I was watching these videos, I had no idea what the business and financial lingo meant. And then I'm also learning how to read charts. I'm also learning how to operate the platform I'm on. So I've been trading options for about 2 years now, and I feel like I have a really good way to explain it to people who are new. But I always have to say, I'm not a financial advisor or legally allowed to give you financial advice in any shape, way, or form. This is just me explaining what I do for entertainment purposes only. And just to make things clear, I'm gonna talk about options as if they're a bad thing. The reason why is because people have literally ruined their lives because they've gotten too cocky investing. They borrowed money because they had this hopeful, wishful thinking that this investment is gonna go up or go down, and they ruined their lives. So I really want to take this as like a serious topic in the beginning, but without wasting any more time, let's hop right into it. First things first, I'm going to tell you exactly what an option is. An option is a contract giving a buyer the right, but not the obligation to buy, which is a call. And a call is when you think the price of the stock is going to go up. If that doesn't make sense, I'm going to show you exactly what I mean. And then, or you can sell it, which is a put. And a put means that you think the stock is going to go down in price. So the best way I explain options trading is options is like a multiplier on your money. I'm going to go into that and show you exactly what I mean physically. But as you see right here, I open up my Robinhood portfolio. I have a couple quick announcements to make for you guys that are going to benefit you. One, you see that there's $1,700 in my portfolio. I funded it with $1,000 of my own money, and the whole goal of this is to go from 1,000 to 10K by the end of February. It's a weird goal, but it keeps us entertained. If you want to follow everything I'm doing and just seeing like what I'm buying, what I'm selling, again, not financial advice, I have a free investing Discord down below, and you can promote your Instagram, your YouTube videos, send memes, talk, or just send different information on stocks and talk to other investors. The whole goal is to have a large community of investors talk to each other. So if I scroll down, you'll see my investments, my watch list, and everything like that. Today, I'm clicking on NNDM, which is the ticker symbol of the stock. It's called Nano Dimension. And if you hit the trade button and then trade options, it's going to pull up the option screen. But if you're new, there's going to be a screen that pops up that says Discover. And the Discover screen is going to give you a very basic overview of what options trading is. Now, I'm using Robinhood because it's the easiest app to really function. And it just tells you, hey, do you think the stock's going up? Do you think the stock's going down? Or is it staying the same? And it'll put you on the right screen and the right things that you need to be investing in. So I'm going to work my way from the top of the screen and then make my way down. So you see at the top here that there's different dates you can buy. So basically, that is what you want to call the length of your contract, or the amount of time you're going to be allowed to predict when a stock is going to hit a certain price. So I can skip all the way down to August 20th, 2021. Now, these aren't preset dates for every single investment. Different companies will have different dates. So if you go back to January 15th, that is when I think that this stock's going to hit my target price. So right now at the bottom, you'll see a little tiny bar, and it just tells you the share price. The share price right now is $9.08, but I personally think by January 15th, it could probably hit $12. I mean, that's realistically speaking, that's pretty good. And those of you who are investing into this stock know exactly what I'm talking about, but let's not overcomplicate things. You have what's called a call and a put. A call means you think the stock price is going up, and a put means the stock price is going down. So when you hear investors talk about shorting a stock, or I'm shorting this and that, it means basically like you think the company's going to do bad and on a future date. So when the market crash happened back in March, a lot of airline companies and cruise line companies really went down in price, and a lot of people shorted those companies, and you make a lot of money. And basically what you're doing is you're borrowing a stock at a certain price and then selling it back for more at that time. So I'm going to jump over to the put screen because I think the stock price is going to go up. So I'm just covering puts just to get it out of the way. Right here, the $20 put, that $20 is what's called the strike price. If you ever watched an investing video on this before, and they talk about the strike price, that's the price that you think it's going to hit by that date. So below it, to break even, the stock has to hit $8.75 a share, or if you want to look at it percentage wise, it has to go down 3.63%. And then on the right, which is 1125, that is what's called the premium. Now, a lot of different people talk about premiums and stuff like that, and I'm gonna go back to the call screen, and I'm gonna show you exactly what I mean by premiums and explain this in a very simplistic way. So back up here to the $20 call. For calls, it means that I think the share price is gonna go up to $20.09 or go up 121%. And that's just to break even on my money. That doesn't mean I'm making money or losing money. That means I'm just staying neutral. But on the right, the premium is 9 cents. So if I click on it, you're not paying 9 cents. As you see where it says contracts here, below it, it says times 100 shares. And that's what I mean by a multiplier. So when I hit 1, I multiply the premium price by 100, so it's actually $9. And that's why the price fluctuates so much when you trade options. Now, this is the same thing if you're doing a call or if you're doing a put. It's no matter what you think, it's always times 100. And down below where it says limit price, when you buy just a normal stock, you can set what's called a limit order, which just means you set a certain price on that stock. So if you want a stock, if a stock right now is $100 and you don't want to pay any more than $95 a share, you can set it there, and if that stock hits that price, it'll buy it for you. Now, it's very similar to this, where the premium is you can bid on a lower price or you can ask a certain price to just basically lock in the premium price for yourself. So going back on the main screen, I'm going to focus again on the $20 call. If I think the stock is going to hit $20 by January 15th, let's just say the stock goes up to $23 a share instead of 20, but I'm still holding on to it, and the date isn't up yet, right? I'm just going to throw some random numbers at you. So this isn't accurate. I'm just doing this as an example. So the premium price right now is 9 cents, but let's say it hits $23. The premium price is going to go up because, to explain this in a very simple way, this is a contract or an agreement between a buyer and a seller. So right now, I'm buying this 9 cents premium, this contract, from somebody else. I'm buying somebody else's shares. And then when I go to sell it, I'm selling it back. And if it's at $23, it means that I held these shares at a better price than what people are able to get them at. So wrap it all together, they think that my shares are more valuable, so they'll pay more for them because they believe that that stock's going to hit that price. Realistically, I think that this is going to hit $12.50. So if you look down the screen here, I'm going to click on that. That's a 47-cent premium. So if I hit one contract, it's going to be $47. By the time that day is up, if it is above or below, that's how you lose money. Now, if I go back to the main screen again, and then jump all the way over to August 20th, 2021. So I'm skipping to a further date. Just showing you here again where it says a $20 call at the top of the screen. You see how the premium now is $2.52? The reason why the premium is so much money is because there's a much greater chance that I can earn a larger profit in that time span. Meaning that those shares are more valuable, so I would have to pay more at that time. So when you look at these, you have to think in your head, and just like any investment, you have to negotiate with yourself. What are you willing to pay for, and what are you going to sell at? You have to have a plan before you do these, because when you do options trading, the more contracts you buy, so like the more shares you buy, the more the price is going, the more your money is going to fluctuate actually, and there's going to be days where you can be down like $500 or up $500 depending on how much is in your account, and you have to have a plan. You can't really have weak hands because you can lose money really fast in this, and I've seen it happen over and over, and it's happened to the point where they literally made meme compilations of this. And stocks is kind of boring to the average person, so the fact that people are finding this funny is kind of funny. But you go back to the original date of January 15th. As you see, the premium is less because there's a very slim chance it's ever going to hit that, so it's not really that valuable. So that is the absolute basics of options trading. I didn't go into crazy details, so if you're a more experienced investor who has traded options in the past, you'll probably watch this video with a side eye, but that's basically what you need to know when you go and do this. So if you still want to learn, I have a few options for you that don't benefit me at all, but it's just really for your own experience. You can do what's called paper trading, which is basically fake money, but you use the same platform and you can just watch what the price does. And I really do recommend that, because when the price fluctuates and you just watch that number go up and down, it helps you get like a mental clarity of what is going to happen when you actually invest into this. And you can watch other people's videos, but you don't learn as much because it's not your money, it's not your portfolio, and you're not watching it in real time, and you kind of just listen to somebody else speak, kind of what I'm doing. There's a lot of things that are going to be getting thrown your way, and you're going to panic a little bit. I've done it myself, I'm guilty of it, so I'm just trying to save people from my own mistakes. And if you're not willing to listen to that, that is okay. What I said before is my investing Discord down below. I'm going to talk about everything I buy, everything I sell. I'm going to be trading options in this portfolio, as well as just buying regular shares. So if you're interested in that, if you have any questions, comment down below or comment in Discord. I'll answer as soon as possible. And thank you guys very much for watching. I appreciate your support, and I'll see you next time.